Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Tuesday, December 1st. Okay, quick look at futures. We are up boldly green today. This morning, small cap futures are up about 1.5%. ES is up a little over 1%. And NQ, NASDAQ futures are up 1%. So a big bold green start to futures. Let's see if we can follow through in the regular session and at a minimum hold those gains, but hopefully build on them. So let's get into it. And one thing I want to mention before we start looking at the technicals this morning, I want to thank those of you that reached out yesterday with thank yous and compliments on the levels that were laid out this morning, letting me know that you capitalized on some of those intraday trading opportunities. That's music to my ears, and it makes me feel really good that the work is getting through and helping traders make money. If you're new to the channel, I have a lot of confidence in my levels. I put a lot of work into identifying the key pivot points and trading locations, and I think that you can really lean on them, trust them, and focus the majority of your energy on executing the trades, executing your plan. Then, over time, you're certainly welcome to, do your own technicals, validate your own setups, etc. I'm here as a resource and a help to you guys. And I think that's one of the most important things that I can do for you is let you know the key levels, what to look for, what to anticipate, what to see when it's not working, what to do, at reversal points, that kind of thing. I think that makes all the difference. So, and you letting me know that you were able to do that is just great. I mean, I love it when traders execute their plan. It's great if I had a hand in it. It's fine if I didn't and you did your own thing. There's tons of ways to make money in this market. Find out the way that works for you and keep working that system, man. I have in my emails, just win, baby. That's the name of the game. It doesn't matter how. It doesn't have to be pretty. It doesn't have to be elegant. You just have to win. And the more often you can consistently win, that's the name of the game. Set up your trades so that if you're wrong, you get a paper cut, you live for another day, and when you're right, you've got great trade location where you can take advantage of the price action. So, okay, let's get into it. SPY 2 hour. We started yesterday up towards the top of the range. We came down. Notice the low. Perfect tag of gap support where we got the reversal coming back up. Now this morning we're going to have a big gap higher. We closed around 362. We're up about 4 points on futures, so that puts us up around 366 as we stand now at 6:37 in the morning. So for today, realize you've got a $4 gap below that may or may not be too, freaking juicy for these guys not to sell into. So, be on your guard for, a fast $4 move down to terrify everybody. And then, close that technical gap at 362 and then rocket it higher. And if you see that move, of course you can try to participate to the downside, but I would be looking to cover any short position that I had, you know, in and around just above 362, and look for that reversal and get long, you know, in the 362 area, and then look for a move back higher. Now, as far as actually trading that, unless you're really sharp, you know, at the open, the trade would be watch. You know, watch those first few bars, and 364 will be your first immediate pivot. It may come down to 364 and hold this support level and then reverse, basically just filling half the gap. But if 364 is breached to the downside, you've probably got $2 of travel there to complete that gap fill before the reversal. We can see it here more closely on the 30-minute chart. We'll open up here at 366. You'll have $2 down, open down to support at 364, and then another $2 down to complete that gap. So that's a real interesting place, with 364 being exactly halfway between the anticipated open around 366 and a complete gap fill at 362. Now, just looking at yesterday's price action, we had 362 as our pivot. So on that breakdown, that was your signal for a short entry. We came down and tagged the top of the gap. If you were sharp, that would have been a place to cover. But even if you weren't, say you held on, when you recovered this 360.25 level, that was your signal to get out. Then you had an opportunity when price came back down again and reclaimed this 360.25. That was an opportunity to get long with a stop just below. And if you got long anywhere in here, either at the gap near 359.25 or on the recapture of 360.25, you got a nice push and a $2 move into the close for what could possibly have been at least $2 in both directions. So, you know, you had a chance to capture $4 or $5 there. So that would have been some nice trades in there if you were able to execute that. Moving on to the Qs, 2 hour. We had talked about this level here at 297.50 as a key pivot point. We had also identified this prior high as a area that needed to be taken out for higher prices. And once this broke down, a number of people got short there and got a nice move down into the 295 area. So it doesn't look like a lot there, but there was like $3 to be made there on this long wick. So let's look at it here. This was the channel that we had drawn, and we said that you definitely wanted to have a short bias if we entered the gap and we broke below this channel support. That's what happened. We got an overshoot down here and then a reversal. back up through 296. If you had been short that period of time, the recapture of 296 would have been your signal to get out of your short and flip long, and then you got a great follow through the rest of the day. And there were actually a couple of traders that on this initial push higher towards 300, they took their objective short against the prior high, and that turned out to be an awesome trade. You had to be quick, and I'm not saying that was easy, but it was definitely there. It was a very objective level. And I made note yesterday that SPY had like $10 to $12 of overall travel during the day. You know, it started near 300, went to 295, and then back to 300. That's $10 of movement. And even if you captured 5, 6, 7, 8, I mean, that's a great day of trading any way you cut it when you have, you know, that amount of movement for one thing, but also very good technical action off of the pre-identified levels, the gap fill. You know, it just worked out perfect. And another thing to note about yesterday, no wacky candles, no shakeout candles, no panic moves to shake you out, you know, out of your position and frustrate you. It was straight down with a reversal and then basically straight back up, a V recovery. And if you can catch that reversal point or anywhere close to it, those are really nice trades to get. Of course, you never know that's what you're going to get until there's hindsight. But you know when you're in one, if you got good trade location, you can just sit in that trade. And with no, you know, shakeout candles, there was no reason to, you know, panic and exit your position. So that worked out really, really well. And, you know, we are set to open this morning, you know, up in this 302 area. So the same comments that applied to SPY, just be aware of your opening gap, that there may be, you know, a flash move back here to 300 to fill that gap. And if you got that move, you certainly want to try a long at 300 with a stop just below after the gap fill, and then look for a move back higher. IWM. Small caps did not perform yesterday. I mean, if you are in any of the, you know, the reflation trades that we're in, you know that yesterday was kind of a tough day at the office for our swing trades. A lot of them got beaten up, but IWM is outperforming this morning. It's up 1.5%, looking to open here up in this 184 area. So hopefully this will be a bounce back day for some of our reflation swing trades that we have on. But back to IWM, same comments. We've got a prior high right in here at 184.25. We're going to get a gap higher. Watch for the gap fill lower to potentially come down to yesterday's close at 181. But then if you get that on the recapture of 182, I would get long. If the gap doesn't fill, I think you can be long above the prior high area here at 184.25, and that can be your anchor point looking for a push higher into the day. And hey, we don't know. This could be, the start of the so-called, Santa Claus rally. That's nothing to trade off of. That's nothing to bank on. But if you take out the high, you got to buy. That's my point. And that's a good little saying to, carve in your trading desktop or to put on a sticky note on your monitor. If you take out the high, you got to buy. Why? Above, there's no natural sellers, and who knows how far they might push it. And you want to be participating in that move with a good anchor point, good trade location, right at the prior high. So let's just run through a scenario real quick. Say you get in here at 184, and then there's a push up to 186, 187, and there's a pullback. Depending on where you're at, time-wise, whether you bought a weekly options or a month-end option, 3 weeks out, or a quarterly option that ends on December 31st. If you're in at 184, you don't have to panic on a red day, on a pullback day, because you've got great trade location. If you get in up here, then all of a sudden you're panicky because you're underwater. So the key is, once you break to new highs, if it's an index or a stock that you want to be in, buy that high, set your stop just below. If the breakout fails, that's trading. You have a paper cut. But if the bulls run towards the end of the year, you're going to be sitting pretty, and you're going to be holding all the aces, because you're going to have great trade location, and there won't be any reason to get shaken out. Here's the 30-minute view. You can see after this breakdown of 183 out of this wedge, got a nice push down to close this gap, and that was good for at least, well, you got 183 and you got a tag of 180, so there was a potential there for $3, and then it came back basically almost to the lows into the close. IWM was really weak yesterday, so it would be nice to come back and take out this 184 and move higher. We'll have to see if there's a gap fill move early in the morning before we get the breakout. Facebook, not a ton going on, but there were some trading ops. When you had the morning move down below our pivot point at 273.50, and then you got the V reversal, that was your long entry point on the recapture of 273.50, and then you got, let's see, closed at 277, so you got 350. I mean, that's a nice trade. 350 move in a few hours. I'd take that. If you did that, great. Now today, bigger picture, Facebook's got to take out 280 to really get cranking. If it makes a move up here to 279.75, 280 and stalls, then that's your objective short. If it breaks out, I'd get long. If you have a pullback into 273.50 that holds, that's your second bite at the long trade here with a stop just below. And if for some reason, they fade this whole thing this morning and you lose 273.50, odds favor a pullback into at least 270 and possibly 266. But given futures, given the look of the chart, I'd favor a move at least to test this 280 and quite possibly getting a breakout. Apple yesterday looked the best of all the FANG names. There was some initial weakness yesterday, but then came down. Trying to see where we opened yesterday. Okay, we opened at 117. We went a little higher, then we came back to 116. So this area right in here was your low, and then recovering 118. And I think I talked about this in the both in the pre-market and the trading room, that was a buy point with an upside objective of this downtrend resistance, and then this 120 level, and then that I thought above 120 was a long, and I still do. They dumped it into the close, but now this morning we are trading back up above this 121, and the last time I looked, we were at 121.50. So if you had, got in yesterday around 120 or any time between, what you can do this morning is raise up your stops to 121 if you like, or just leave it at 120 and then look for a push higher. But here's a fun fact. $48 million in call premium were bought yesterday in Apple. By far the number one name on the board across all the options space was Apple with 48 million. I have looked at a lot of options over the years on a lot of names. 48 million is a lot for SPY, let alone an individual name. 48 million in a single stock in a single day is absolutely staggering. That doesn't mean they're right. That doesn't mean off to the moon, but it does mean a hell of a lot of institutional money is looking for Apple to go higher. And given the technical setup, breaking out above 120, breaking above this downtrend resistance line, and now getting up above 121, your next objective is here at 125, and then we'd have to go back to the daily chart to look for that pre-split high, which I think was 135 as the next target above that. So a lot of big money is looking for Apple to go higher, and that's a trade I think, if you're interested in it, is an awfully compelling setup. Tesla. Quite a number of people in the trading room made some money on this yesterday, and I was glad to see it. We talked about 580 being the pivot, dropping out of this wedge. You got a fast move down here to 558, something like that. So you got a quick $23 move. They bounced it, but then closed near the lows. I think today, on a recapture of 580, you can be long. But anything below 580, I would remain favoring the downside. So I think today is just simply pivot off of 580. If they can reclaim that and push it higher, you can be long and look for a move back up to the prior highs near 600. If they can't do it, you've got a key support level here at 560. If they lose 560, you're looking at 525 pretty fast. I wouldn't expect that. I'm just saying that's the technical level I would look for on a break of 560. Microsoft. We had this uptrend line that we marked yesterday. It opened lower, had a reach back touch. If you were a motivated seller, you had a great line to shoot against here at the uptrend line. You got a nice move down to 211, and then your buy point was on the recapture of 212.50, and you got to move up to 214. I mean, that's not a trade you're going to get rich on, but again, that's hindsight. If you're interested in trading Microsoft, you got to take what the market gives you, and it gave you an opportunity for a short. Say you missed that, no problem. Where's your buy point? On the recapture of the pivot at 212.50. So you get long and see where it takes you. This could have gone up to 215, 216 yesterday. You don't know that. All you know is that you had an objective level to get long with a stop just below to know, if you're wrong, you take your loss. But in this case, there was follow through, and at that point you can decide, do I want to hold it overnight, or do I want to take my $1.50 and reload today? So that's an individual trader decision. Amazon, again, good intraday trading opportunity. We keyed off at 3,200. You got an opening push up to 3,230. Failed. Came back down. Lost 3,200. That's your objective short. A loss of the pivot. And we've been saying that these $50 levels have been working like a champ, and they did again. 3,200, fast move down to, what was the low? 31.25, but your technical target was 31.50. You got an overshoot where you could have covered at any point, but certainly once you came back up above 31.50, that's your exit on your short and your objective buying point on the long side on the recapture of a pre-identified pivot level. So $50 down, get back in long around 31.50 or thereabouts, and you got a $30 move higher before they dumped it a little bit into the close. My point is, these levels continue to work. Now today, midpoint in the range, I don't know where it is pre-market, but in between 3,200 and 31.50 for me is a no trade. You got to wait until price comes up here to 3,200 and either breaks out or fails, or a move back down to 31.50 where it either holds or breaks down. I would be leaning to the long side today, just simply because the market's boldly green, but take it level by level and watch the opening gap, like we've talked about on all these opening trades. Google. this would have been a hard one yesterday to really capture. We had talked about, toggling this range, but if you had not gotten short up here on Friday, that was probably a hard trade to grab on the fly. It came down, flattened out, bounced, but never recaptured this 1760. So there was no objective, selling, or excuse me, there was no objective buy. There was no V bounce. There was no recapture. So, I mean, to me, if you made a little money on that whole setup, congratulations. But I don't see, much of an objective trade yesterday on Google. Netflix continues to wrestle with 494 on the top. We opened right near this 492 area, had to reach up, and then it failed, and then found support in here at this 480 level, and then moved back towards the opening level here. It basically finished flat, so it closed where it opened. Your level here for breakdowns and recaptures is 487.50. If you bought that yesterday and held it, you made $5. That's nothing to sneeze at. But if you held that as a swing, and then today we open above 494, you're going to be sitting pretty for a potential move up to 505, and then a secondary target for a gap fill up to 515. Now, if you're not in it today, key off of 494 and watch your backfill of the opening gap. If we open up, 597 or something, and they pull it back to 494 and that holds, that would be a great trade location to try your long. This thing is, I'm not some kind of fanatical Netflix bull, but this price action, this long consolidation here with, a failed breakdown here, but otherwise 477.50 holding like a rock for 6 weeks. I think this thing is building a big base, and I think once 494 is taken out, I think you want to be long this stock. I think if there's any kind of year-end whatever, even if there isn't, this is a key technical level any way you cut it. Let's see, that's 487. You got a $15 wide, $17 wide gap there, or trading range. So a breakout above 494 measures up to a gap fill all the way up to 515 easily. And I think if it gets that head of steam going north after this long basing process of 6 to 8 weeks, I think we could find ourselves filling this gap up to 525, getting up into the 530s, 560s towards the end of the year, if all the stars align and there's a big, year-end push. But like I said, regardless of that, I think you got to get long 494. So let's wrap it up there. If you're new to the channel, and you like what you've heard this morning, why not subscribe? Hey, the price is right, right? I mean, free, nice levels, nice trading plans. I'd like to think that the information would help you make more money than you already are. If you're already making a lot of money, maybe it'll help you make more. If you've been wrestling with consistent profitability, focus on execution, lean on my levels. I think good things will happen. Hit the subscribe button, hit the alarm bell. You'll get all the new content. Over in the show notes are convenient links to subscribe to all my content. That way you'll get an email to your email box each and every time I publish content, which is multiple times a day. And then links to the website where you'll see a lot of inspirational, helpful articles on trading psychology, trade school tips and tricks, a lot of information that you should find helpful. So I hope to see you. Also, if you do that, you'll get an invitation to our trading room where you can mingle and get to know a bunch of good guys and girls in the room that are working hard, working on their trading, sharing a lot of ideas. At the very least, you'll expand your trading network, and I think that's a very positive thing in this environment where, trading on your own, down in your trading room can be a very lonely experience. And it's nice to get to know some people that you can confide in, that you can trust, that you can share experiences with, when you have those moments of victory or moments of defeat that you'd like to share. It's awesome to have a community there that is interested in your success and will lift you up on those days when things aren't going so well. I mean, yesterday was a perfect example. There's a lot of people making money, and I'm looking at my swing trades, and the vast majority were red. I mean, that blows. So we all have those days where we wish things were different. You just have to sit through that and commiserate with your other traders. Make sure you're positioned where you want to be, and then take it day to day. And that's what we'll continue to do. Long way of saying, I hope to see you soon. I hope you decide to join us. So until we speak next time, which should be rather shortly, hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.